Ethereum just lost more than 20% of its value in one of its sharpest corrections in months. The Nasdaq dropped over 3% today. And yet, the largest institutional Ethereum holder, sitting on $9 billion in paper losses, just announced plans to raise $300 million to buy even more. In the next 8 minutes, I'll break down what's driving the sell-off in both crypto and stocks, and why the smart money is doing the exact opposite of what the price suggests. Let's get into it. Start with the damage. Ethereum experienced one of its sharpest corrections in recent months, falling to around the 1560 region after losing more than 22%. The decline pushed ETH back into a major historical demand zone, a range that previously acted as a launching pad for significant rallies. For context, this is an asset that hit its all-time high of nearly $5,000 in August 2025. Today, it trades at roughly a third of that. TradingView fortune. Where do we stand right now? Ethereum is trading near 1689, up about 1.3% in the past 24 hours, but still down roughly 15% over the week, with a market cap around $204 billion. Sentiment? The Fear and Greed Index is displaying a score of 8. Extreme fear. Single digits. That's about as pessimistic as crypto markets get. Blockchain reporter Changeley. But here's where it gets more interesting than a simple price went down story. Funding rates have turned negative, open interest has seen a sharp decline, and momentum indicators continue to weaken. Together, these signals suggest the market is undergoing a leverage flush rather than confirming a fresh downtrend. ETH may be entering the final stages of capitulation, but the technical evidence needed to declare a bottom is still absent. In plain language, the over-leveraged traders are being washed out. That's painful, but historically, it's how bottoms get built. The RSI has dropped close to oversold territory, indicating selling pressure may be becoming exhausted. TradingView. TradingView, now the part that should make you sit up. While retail panics, the largest holders are doing the reverse. BitMine, the Ethereum treasury company associated with Tom Lee, holds more than 5.3 million ETH and is currently nursing roughly $9.2 billion in unrealized losses. Most holders sitting on a loss that size would be trimming. BitMine is doing the opposite. It just announced a plan to raise up to $300 million through preferred stock, carrying a 9.5% dividend, specifically to buy more ETH, stake it, and build validator infrastructure. Think about that. They're paying 9.5% a year to borrow money to buy an asset that just crashed. That is either conviction or madness. And these are not unsophisticated players. On-chain data also showed wallet activity linked to Coda founder Joseph Lubin, adding collateral during the price dip. Blockchain reporter MetaMask, and the fundamentals haven't gone anywhere. The next major upgrade, Glamsterdam, is targeted for the second half of 2026, including a technical change designed to help scale the network by letting validators process more data. These keep Ethereum's long-term scalability thesis on track regardless of short-term price. Blockchain reporter now zoom out, because Ethereum isn't falling in a vacuum. The same forces are shaking stocks, and today was a masterclass in whiplash. Monday looked like a recovery. The S&P on P500 added 0.3% to close at 7,405. Micron, the memory chip maker leading this leg of the bull market, jumped nearly 10% after falling 13% on Friday. Marvell Technology gained almost 9% after it was announced the AI chipmaker will join the S&P 500 on June 22nd. Corning surged over 9% after Amazon announced a multi-billion-dollar agreement for optical fiber to power its expanding US data centers. CNBC +2. Then came Tuesday. The rotation out of richly priced technology names resumed. Chipmakers, the same group that led the recent run, erased a rally and plunged 7.8%. The Nasdaq 100 fell 3.5%. And yet, over 300 stocks in the S&P 500 actually rose. Read that again. The index fell hard, but most stocks went up. This isn't a collapse. It's money violently changing seats out of expensive tech and into everything else. Bloomberg. The second force is geopolitics. In the morning, oil sank below $90 on hopes the US and Iran were close to a deal to end their conflict, easing inflation concerns and sending bond yields lower. By the afternoon, markets sank towards session lows after comments by President Trump suggesting strikes on Iran might resume. One trading day, two opposite narratives. And crypto feels every headline. Prices continued their descent this week following May's employment report and news that Hezbollah rejected Israel's ceasefire offer. A hot jobs report plus Middle East escalation equals pressure on every risk asset, ETH included. Bloomberg +2. So what now? 3 concrete signals. Whether ETF inflows continue, whether treasuries like BitMine keep accumulating, and whether ETH can reclaim $2,000. The price says the sell-off is not over. The institutional behavior says the strong hands are buying it. One of those two stories has to win. And watching which one does is the real game over the coming weeks. Blockchain Reporter. The lesson of this week. Crypto and stocks are competing for the same pool of capital and reacting to the same headlines. When Washington speaks, both your portfolio and your wallet move. If you found this breakdown useful, subscribe. Every Monday, Wednesday, and Friday, I cut through the noise on crypto, tech, and macro. No hype, just the signal. See you in the next one.